Ladies and gentlemen, good morning and welcome to YouGov's latest webinar on COVID, looking at brands and audience impact. My name is Will Alstein and I'm joined by Ben Oxenham and Irvin Ha this morning. We're going to start at 1 o'clock local time, so please bear with us while we allow another minute for everyone to join us. Ladies and gentlemen, good morning and welcome to the latest in YouGov's COVID-19 webinar series. We're here today to talk about brand performance and audience impact. My name's Will Alstein and I'm delighted to be joined by YouGov's Head of Plan and Track in APAC, Irvin Ha, and our Research Associate Director from our Australian office, Ben Oxenham. What we're going to take you through today is a comprehensive update of our COVID data. But we're going to deviate slightly from what we've done in the past. And we're going to use a wider set of data than our just simply our COVID monitor. So in the first section, what we're going to look at, and Irvin will take us through this, is we're going to look at some brands that have performed particularly well across the world. What are the reasons for those? And other brands that have performed maybe not so well in how they've navigated the crisis. Ben's then going to come to talk about the impact on audiences, focusing especially on our economic recovery module. More in that in a bit. And then at the end, we'll come to your questions. So there is a chat function enabled in this Zoom session. So please do pose questions to us and just jot them down as we go. We've also got a list of questions that you submitted at registration. So we're going to leave plenty of time at the end to go through as many of those as we possibly can. And we do very much welcome that interaction. Before we start, I'd just like to set the scene in terms of what YouGov has been doing, what data we have been collecting as well. Now, back in February, when COVID-19 first started to break, our CEO was exceptionally clear about what YouGov's mission was and continues to be. And that is about serving the public good. And what he means by that is giving every person the ability to contribute to the discussion, to have their voice heard, and to aggregate that data and deliver it in a meaningful way to organizations that can make a difference and take a fight to this virus. And so with that in mind, what we have done is partner with Imperial College London, in particular, the Institute for Global Health Innovation, one of the universities that is world leading in disease control and epidemiology. And we have created a global study that looks at symptoms of the virus, that looks at health-related behavior, and looks at compliance with government instruction. And that study is run across 29 markets and is being offered for free to anyone that is interested in the data. It's available to all at GitHub for the row-level data, and it's available on COVID Data Hub. The links are here in the presentation, which I will share with you afterwards. But that data is designed for public health organizations and policymakers. So it is very, very much focused on the consumer. So please do feel free to go and download that data. But that is what we mean by serving the public good. Now, on the other side, there is our commercial data set, designed specifically for clients, and this covers people's levels of concern, people's trust in government, people's understanding of government, and their confidence in it. But crucially, and even more crucially as the days go on, it covers economic confidence. It covers employment status. It covers future spending habits. And this is a constantly, or will be an evolving data set as we go into July and beyond. Now, there are elements of that consumer monitored data that are also put into the public domain, and that is available on YouGov's website. So you can go onto our website, yougov.co.uk/COVID-19, and what you will find there is a series of interactive charts where you can look at some of the key measures by geography, and even zoom in not only on region, but on individual markets as well. But what we will do is we're going to take you through today. Ben is going to focus on our consumer monitor element, but we are bringing other data sources into play here. So we are going to lean on brand index, on YouGov profiles, and on YouGov omnibus or YouGov real time. Our brand index survey is an enormous global brand tracking solution, a consistent methodology that is in place across 41 markets, tracking over 10,000 brands globally. We're able to dig into that data to understand how brands have performed and what the public attitude has been towards them, whether that be just general sentiments towards the brand, or indeed whether it looks at other metrics such as customer satisfaction and how that has improved. So it's really looking at headline metrics of the brand and can evaluate campaigns. YouGov Profiles is our audience profiling and segmentation tool. So this is where we've taken the things that we know, the panelists that we know most about, and we've put all of the data that we know about them into an easy to use, digestible database. So you can really take a deep dive to understand who your audience is, what they think and what they believe. And working in conjunction with Brand Index, we can take people who have rated a brand a particular way and really deeply understand them through profiles. There's also been YouGov omnibus data that we have put special questions out in relation to COVID. So we're also going to use some of that data too. Right. Let's get on to the actual content. And I'm going to first open with a question or looking at brand performance. I'm going to start and then I'm going to hand over to Irvin. And we got some of the questions when people registered for this webinar saying things around how have brands been communicating, and how does that translate into whether people appreciate that, or whether there is early signs of people being tired of the same old message. We ran some work, we ran some questions in the UK just recently, and apologies that this is UK data. We haven't run this same data in APAC yet. But in response to that question, I thought it was quite interesting to show this data. Because what we're seeing is that a lot of communications is misfiring. People agree, or half of them agree, that brands are over communicating with them. And why are they over communicating? Well, 43% say that brands are communicating inauthentic messages. And again, just digging into that, it's really interesting to look at what words and phrases people are either getting tired of hearing or believe are overused. And so when people complain about messages not cutting through, about brands over communicating with them, and about messages being inauthentic, it's because they're hearing these words over and over again, and they're tired of hearing them, and it doesn't cut the message. So 42% of people saying, I'm tired of hearing, or it's overused, all in this together. Unprecedented, the new normal. I have to say, I've definitely been guilty in the past of using the new normal an unprecedented amount of times. But that's and it's an easy lingo to fall into, but consumers are getting tired of it. And so what we are saying is that actually messages have to be more unique. But I think, as Irvin will go on to say, it's less about words and actually more about actions that we have seen in terms of driving brand performance over the COVID period. So that's just a little flavor from the UK, but I'm now going to pass over to Irvin to talk through the brand performance data. Irvin.
Perfect. Thank you, Will. Hi, everyone. Good afternoon. Good morning to everyone. So today I'm going to show you some data from Brand Index and Profiles, which is our syndicated data sources. The data, when I show it to you, may not look as familiar to everybody because we are showing a lot of data in line charts. And the reason why we're showing it in line charts rather than bar charts is because we want to show how data has changed over time rather than data being a point in time data point. So in this case, this is an example of an insurance brand in the UK. I like bringing examples from global because sometimes we do need to learn from what's going on in other markets as well. In this case, Admiral Insurance, they came up with a very small cashback on their auto insurance. And their messaging was that since the lockdown, people are driving less. And if people are driving less, they should not need to be paying that much for their auto insurance. As you can see from the data, the buzz score, which is whether people have heard positive or negative things about this brand, has increased very significantly. Not only has this increased very significantly, if you look at the red line at the bottom, that shows the sector average, and that has not moved. Yeah, so this is really something which is very unique in the UK. There are other brands as well in the US. I believe the brand is called State Farm Insurance, which did the same thing. And again, their data showed increases. Now, this increase in buzz, what did it correlate to, or what did it trend to? And that trended into an increase in other metrics or other KPI, like attention, word of mouth, and very interestingly, and most important, customer satisfaction. And the reason why it's very important is because, of course, if customers are satisfied, they will continue coming back to you again when they're looking for something similar in the future. Okay. So let's bring this closer to home and let's look at example in Singapore. This is looking at the Singapore insurance sector, looking at prudential insurance. And prudential insurance vis-a-vis the biggest insurers in Singapore. So the pink line are insurers like AIA, Great Eastern, NTUC Income, Manulife, and of course, Prudential's in there too. You can see Prudential over-indexing or increasing a lot more than the other insurers. And even at this time, when all the insurers came up with the same type of messaging of covering those infected by COVID-19, Prudential took another step, and they took it as protecting or supporting those affected, right? Not just necessarily infected, but affected by it, which means that people which needed to go into quarantine just in case, right? They may not have COVID-19, but maybe a family member had it, they had to also go into quarantine because of it. So this increased their score very substantially. Looking at the other metrics, attention went up, reputation went up, and purchase intent also increased. Yeah. Let's look at another example, and this one is from a supermarket. I'm bringing an example from Singapore as well, and this is Sheng Siong. Sheng Siong is a supermarket in Singapore. During the COVID-19 period, they released their what do you call that? They released their financial statements. There we go, and they of course reported higher than expected profits in Q1. Right, people going to the supermarkets, you know, especially after Chinese New Year. What they did there was, rather than keeping all the profits internally themselves, they shared the profits with their staff because they knew that the staff required that as well to get over the COVID-19 period. Again, this saw an increase in their impression across general population, reputation, whether people will be proud or embarrassed to work for them, and recommendation, up by 15 points. So these are some examples of really interesting things, actions that people have or brands have done rather than words. Yeah, let's show you another example from India. And this is a very interesting example. This is looking at Zomato. So Zomato had a campaign come out where they talked about delivery, whether contactless delivery in India, making sure that their customers got their goods safely, and there was a lot of hygiene checks on the delivery. You could see the buzz, impression, and recommendation score increase over the month of January all the way through to mid-February. However, this is where halo effects of the industry may have affected how the brand is perceived. And where if you click the next button, we can see that in the middle of February, there were issues with a pizza delivery boy which was infected with COVID-19, but continued to deliver pizza. You could see that it wasn't Zomato's delivery person, it was a separate company's, but Zomato's scores also decreased. Right, and that's one of the things that we are able to look at with brand index data, looking at how a brand is continuously tracked across time rather than a point in time. Okay, I'm going to give you one example here, looking at the length of data that we have and how a brand or brands have changed over the year. And this is looking in Australia. For those of you from Australia, I'm sure you guys are pretty clear on the Royal Commission which happened on the banking sector, or the financial sector. You could see when the Royal Commission was held in 2018, metrics for the banks, or what we call the big four banks here, fell. Right, buzz, reputation, impression, and the three which I've charted here. But of course, the rest of the metrics also decreased at the same time. They had a very rocky year and a half with the commission, and there were a lot of recommendations that the government or the commission gave to the banks which they needed to follow. right? You see some of the increases, some of the improvements that they've made over time. But what is very interesting was in January when the banks decided to really support customers and during this COVID-19 pandemic period. And that's where they had, if I'm not mistaken, some incentives with mortgages, with loans. And that's where you can see, right, the brand performance increase as well with buzz, reputation, and impression. And at the same time, we've got increases in some of the other metrics. Well, we click the button, we've got increases in value, quality, satisfaction, and recommendation. Yeah. So this is how brands can work in terms of increasing their brand perceptions over the period of time, rather than just communication and talking about what they're trying to do. Okay? Now I'm going to give you a flip side example here. And this is a flip side example from Germany. In Germany, the government did announce that they were allowing brands to, I guess, not pay rent. And this was focused a lot more on small companies, right, which could not afford to pay their rents during this time. Big brands, Puma, H&M, Adidas, Deutschmann took advantage of it and decided to also stop paying rent. And that's where you can see their buzz scores all decrease at the same time. Right, and you could see that because of the strengths of the Adidas brand, it decreased a lot. Yeah, other KPIs, if you look at them, the perception of impression, reputation, and consideration all decreased as well. And this was even after they decided or they announced publicly that they will continue to pay rent 1 week after they said that they wouldn't. Right? You could see everything still continue to decline, and it took time for it to increase or improve again. So that's where, again, when you look at brand index data, being able to understand over time how a brand performed before a crisis, during a crisis, and how it's improving after a crisis. Marrying this data with our profiles tool, one of the things that we've seen is people who have a good impression of Adidas were the ones which were most likely to consider buying from Adidas again. And that's where we mapped out with profiles people who are current customers of Adidas and have a positive impression. You can see some basic demographics there. Because this is sports, I pulled up some information about sports by Munich fans. They like to work out. They see themselves as team players. They don't like to be alone. Right? What type of sports they follow, what type of levels of interest, and some information about bucket list. All right, so all this data here is based on profiles data that we already have in YouGov's connected data cube. We're able to leverage this data to build a pen portrait to really bring a segment to life. Okay? So this is profiles. I'm going to show you one last chart or one last example, case study of McDonald's. And McDonald's to me is near and dear to my heart because I love McDonald's. I've been eating McDonald's since I was a kid. You can tell, if you know me, you can tell by the size I am. McDonald's is very close to my heart. And this is where we brought in the data from COVID-19 tracker into brand index to show, in this case, McDonald's had to close because their staff, one of their staff was infected, a few of their staff were infected with COVID-19. They decided to close all their branches in Singapore and kept it closed even after the phase 1 circuit breaker was over. We're able to look at buzz. In this case, all buzz went down, and we're able to see those which were afraid and those which were not afraid of COVID-19, how they reacted to this news. Not surprisingly, all of them went down during the time when it's closed, and when it was reopened, or when they were announcing it was going to be reopened, look at the increase in all 3 of them at the same time. So even those which were afraid of COVID-19 and the scare they had with their staff being infected, they were also hearing great things about McDonald's opening again. Yeah, I'm going to show you another chart here. And this one, again, I have cut the data based on consideration. And what's interesting here is when you look at the data, those which were afraid of COVID-19 will consider eating at McDonald's more than those which are not afraid of COVID-19. And I believe that if we had tracked this further back, and as we continue to track this towards the future, we may still see this split between the two groups. And why is that so? Right? That is where we're able to bring in some profiles data to look at the differences between those which were afraid of COVID-19 compared to those which are not afraid of COVID-19. I've got some information there on demographics. We have some information from social issues, for example, whether or not they strongly support surveillance to fight crime. In this case, Singapore has announced that everybody will be given a tracking bracelet or something which will be used for contact tracing. No, they probably are going to support that very strongly. We looked at some information about sports, more likely to follow S-League, which is Singapore League. There are people which haven't traveled in the last 12 months, more likely to not have traveled, and they will consider more likely to eat at Pizza Hut than the other brands. Looking at other brands, they are customers of Qoo10, e-commerce website, Sunsilk, a shampoo brand, and Sheng Siong, a supermarket. Looking at some information about food and drink, because we were tying this back to McDonald's. They love to eat together at home for a meal. They'll pay more for products which are without artificial additives, and they don't let their friends eat or their family eat junk food, right? Compared to those which are not afraid. Some media attitudes, right? TV, very important. Radio seems to also be a very important part of this group of people who say that they are afraid of contracting COVID-19. Last but not least, because we have such deep data sets and wide data sets in profiles, I just threw in something which had nothing to do with food, and that is top financial attitudes. And it's interesting to see that people which were afraid of COVID-19 are also people who feel that stocks are too risky for them. They prefer investing in personal items like gold, watches, paintings, wine, rather than stocks. And they do feel that being insured is important for everything. Yeah, so this is data from profiles. Last but not least, I'm going to show you some data from Indonesia. And this data here looks at change since COVID-19 has happened to today in terms of whether or not people are likely to purchase or use brands from each of these sectors. So the first group here, and in Indonesia, I believe that we've got about 18 sectors. I'm only showing you 8 sectors here. The first 4 are those which have decreased. Not surprisingly, airlines has decreased. Automotive, of course, has decreased. Fashion retailers, and lastly, personal care. Those that have increased are cooking ingredients. People are cooking more at home. Household care. People are cleaning them more, their homes more. Internet, of course, because it's called internet, but actually it's the online brand sector, and that includes all the video streaming. You've got TikTok in there, you've got Facebook in there. All of them have been increasing because people are spending more time at home. And last but not least, financial, including insurance, has also increased over the past 5 months. We continue to keep track of it. So as time goes by, we're able to see when a sector recovers or whether or not a sector will recover in the near future. So this is data from brand index and profiles, and hopefully this gives you a very nice indication of how brands have been performing and what brands need to do continuing on to keep consumers engaged with them. Thank you.
Fantastic. Irvin, thank you very much. That's fascinating. Really interesting to see how brand action has translated into brand performance and consumer perception, especially those latter KPIs, not just buzz, but also linking through to reputation, customer satisfaction, etc. Okay, so moving on, let's look at, if that's how brands have performed, let's look at audiences. So without any more of an introduction, I'm going to hand you over to our Associate Director from our Australian office, Ben Oxenham, to look at our COVID monitor and the economic recovery data. Ben.
Thanks very much, Will, and thanks, Irvin, for that overview just now. So as Will mentioned at the very beginning, since around mid-February, we've been looking at, in almost 30 global markets, we've been running weekly tracking studies across nationally representative samples to look at the COVID situation in these markets. Some of this data, as was pointed out, was focused on the health-related issues to the pandemic, working in relation with our partners at Imperial College and the WHO. However, what we're going to look at today is the monitors that reflect mostly on the public perception and expectation of the economic recovery our region is now beginning to go through, now that many of our countries are seemingly beginning to get hold of the health-related issues caused by the pandemic, and the attention of both governments and indeed the media increasingly turns to how we begin to rebuild following the economic hits so many countries have taken. So where this data becomes incredibly useful is in giving both policymakers and indeed organizations an understanding of the human impacts of the pandemic across our region on our populations and indeed consumers. Whilst economic data can of course be taken from numerous official government sources, and many of which has been outlined already, many of our economies already are approaching recession, and indeed unemployment has risen, which has been shown in many metrics already. What this cannot do, however, is clearly demonstrate the behavioural reaction this economic climate has caused in our consumers. And therefore, this is what our monitors can help to do. So first of all, a quick note on methodology. We're looking at 10 markets today across the APAC and MENA region. As I mentioned, most will be samples, nationally representative samples of 1,000. However, in some markets, we look at samples of 2,000. The data has been weighted post-survey to ensure that it's either representative or in some markets online representative of the population. We've been tracking this data since mid-February this year. Today, what we're going to look at are the 5 most recent waves since early May through to the beginning of June. And in some parts, our focus on the aggregate from these 5 waves to demonstrate a larger sample. And in others, I'll break down each individual wave to show you a trend over time. Whilst on most occasions I'll focus on all 10 markets to benchmark, from time to time I will do a deep dive into certain markets to reveal how different parts of the population in these markets and consumers are responding to the crisis. Can we go to the next slide, please? So first of all, let's look at an overview of how our publics and consumers are currently feeling about the COVID-19 health situation in their countries right now. We're looking at the 5-wave aggregate here. What we can have been able to see over the past month across our region, and in stark contrast to the other global markets where we're monitoring this data, is such as the US, the UK, parts of Europe and Latin America, we are seeing a big positive outlook in general take hold and embed itself, as the majority across our markets tend to see that the health situation is currently starting to improve and indeed get better. As some examples here, 8 in 10 Australians and 7 in 10 people in Hong Kong feel the situation is currently improving. In Malaysia, it's 9 in 10, which reflects the time since around early May, when the country's extreme strict lockdown and restrictions on personal movement finally began to ease somewhat. And we still see a relatively benign health situation in that country compared to other countries across the world. We see slightly less positivity in the MENA markets that we're looking at, with a quarter of Saudis, for example, and a fifth of people in the UAE still feeling the situation is getting worse. However, in both India and Indonesia, we see large majorities still feeling like the situation is getting worse. In Indonesia, we still see on some days over 1,000 new cases of COVID-19 being reported. And the country has indeed only seen, on 3 occasions over the last 2 weeks, less than 500 cases per day. Whilst lockdown restrictions are starting to be eased, including in the capital Jakarta, Indonesians are still being encouraged to accept the protocols of staying indoors as much as possible. So to this end, let's take a deep dive first of all into Indonesian data. So when we begin to profile the Indonesian population by their response to whether or not the COVID-19 situation is getting worse or better, we see some interesting characteristics. First of all, we can see that women are slightly more likely than men to feel the situation is getting worse. We might be able to explain this when we look at other studies and sources of data. Whilst many studies agree that men are often biologically slightly more vulnerable to the health impacts of COVID-19 than women, other research has shown and focused on the wider economic and social issues, which suggest that women are actually often more than not exposed to the other impacts of COVID-19 more than men. For example, the WHO estimates that almost 80% of nurses across Southeast Asia are female, putting a massive disproportionate impact on women who are putting their lives on the line to care and treat for the coronavirus victims in our health systems. Specifically in Indonesia, and the wider economic impacts are also having a disproportionate impact on women. Other studies have shown that women are growing increasingly vulnerable economically as they are found to be overrepresented in sectors and the jobs hit hardest by COVID-19, such as manufacturing, textiles and garments, etc. We're also seeing that the youngest generations are increasingly becoming more concerned about the situation in Indonesia than older people, with 2 out of 3 Gen Z Indonesians who are born from around the mid-1990s onwards feeling that the situation is still getting worse, compared with, for example, their parents in Gen X feeling the same way. Indonesians who feel the situation is getting worse tend to have told us that they are feeling more directly impacted financially by coronavirus, with 2/3 saying that their household income has worsened in the past month, compared to almost half nationally. These Indonesians also tend to be critics of the government, with half of them feeling that the government has handled the crisis poorly, compared to 38% nationally. Moving on. So it becomes clear from some of our data that the public are increasingly making a distinction between the health situation and the economic situation that we're now seeing. Much of our news across the region, and indeed our social media, is now turning to our economic recovery following the damage caused by the virus and the national lockdowns that were imposed on us. And everyone is being exposed to unsettling news stories about this across our region on an almost daily basis, with frequent mention that recessions are either already on us or expected to hit in the near future. Next slide, please. Therefore, whilst with a few exceptions as just outlined, the majority across the region believe that the health situation in the country is improving, when we specifically address what people think about the economic situation, it becomes much more pessimistic. This is also the case for thinking ahead out of our immediate situation into the next 12 months. It's therefore clear that the majority of our populations expect recessions to be both deep and long. The impact, of course, is how we expect this to impact and alter their consumer and commercial behaviour, which will have a knock-on effect to our economies. Asking people what they think is most likely to be the case in 12 months' time, we see that over half of Australians and Indonesians, back slide please, over half of Australians and Indonesians and Indians believe their countries will be in a recession a year from now. In Singapore, Malaysia and Thailand, it's 2/3 of people, and Hong Kong is almost 8 in 10, which probably reflects the fact that that region was experiencing significant social and economic issues in 2019 prior to the pandemic. Whilst we see less pessimism in MENA markets and indeed China, we certainly do not see much optimism either. Next slide, please. And it's here where we see, whilst compared to other markets, only 31% of people in mainland China feel the country will be in recession in a year's time, but even fewer, 15%, believe that that the reverse will be true and that China will instead return to growth next year. As we can see across the region, only small minorities express this optimistic outlook, such as 13% in Australia and Indonesia, and only 1 in 10 in Thailand. This is compared to other markets we're looking at globally, such as the United States, where almost 1/4 of Americans feel that in 12 months' time, the US economy will be out of recession and growing again. Therefore, we can see clearly there's no real link between the health situation. For example, the US is currently still recording thousands of new cases every day, and indeed perceptions on the economic damage and recovery. Next slide, please. This seems to be because people are looking beyond the health situation now and reflecting on the wider economic situation in their countries. And what they are seeing on many levels is a fast reduction in business and commercial activity all around them. This is even the case as our markets slowly begin to ease their national lockdowns. And it's not just from the constant barrage of unsettling economic news that we're getting daily, but through our own experiences, such as from inside our very workplaces. We asked workers and people who are employed across the region whether or not the level of business activity in their workplace had increased, decreased, or remained stable over the past month. And what they tell us is pretty sobering reading, and indeed a cause for concern for many who feel that the vast rounds of job losses that our economies have gone through in the last few months, March, April, and May, are now over. It seems it's not. Many of the workers in all markets except China, Hong Kong, and Australia, so majorities of workers in all markets except China, Hong Kong, and Australia, tell us that business activity in their workplace is still stagnating. And even in these markets where there are pockets of concern, so for example, 4 in 10 part-time Chinese workers feeling the activity of their workplace is still reducing to this day. And even for those who tell us that activity has indeed stabilized, this is already reflecting on the low base achieved through the midpoint of the pandemic, when national lockdowns were at their peak, and therefore indicate that business activity in general is much below the points that it would be needed for an economic recovery. And so what is the emotional and indeed potential wider economic impact of this perceived fall in business activity? Well, one consequence is the link to current high levels of concern over job security. We can see that even among workers who have so far been spared the pain of losing their job as a result of COVID-19, many of these people are nevertheless living in a state of almost constant concern that their jobs are not fully safe and secure, and indeed they may feel they're next in line to face job losses in the near future. Again, looking at aggregates across our 5 waves of data, we can see that almost half of the workers that we speak to tell us that they feel their job is less secure now. So for example, 4 in 10 Malaysians and Singaporeans. In Hong Kong and Australia, about a third of workers still have concerns about their job security this month. And the same is true for around a fifth of workers in mainland China. And sadly, across all markets that we explore, it tends to be workers on the lowest incomes and potentially without the means to really prepare themselves for a prolonged period of unemployment that tend to be most concerned about their job security. However, I have to say at this point, it's not all doom and gloom and depressing news. What our data over the past month is beginning to detect in some markets is a leveling off and indeed maybe a decline in fears on job security as workers potentially start to feel more positive and secure about their work and economic future. Looking now at just Australia and China as 2 examples, we see a significant decline in fears over job security in Australia, a market where we've been tracking this data since mid-April. Starting from a high of over 40% of Australian workers feeling insecure, this has steadily and mostly consistently declined over the past 2 months to our most recent stats showing it at just over a quarter. We see a big decline in the waves measuring late April and early May, as many states in Australia finally began to not only announce but actually implement a progressive relaxation of their lockdowns, allowing for the first time many businesses to plan and indeed open up for the first time in a while, and potentially allowing many workers to finally feel more optimistic about their employment security. In China, we have been monitoring this data for slightly less time, but we do see a similar, somewhat less stark trend here, as authorities there continue for the most part to successfully limit any new cases and allow the economy to reopen. I've got to say this data was taken before the most recent case in the last few days of the outbreak in Beijing. And of course, it therefore might be susceptible to changes if we see any second waves across the markets we're monitoring. But of course, this positive trend is not universal across the Asia-Pacific region. And now we're introducing data here from Singapore, where we see that it started at around a similar level to the levels of concern in Australia at the end of April, early May, but has remained fairly and somewhat stubbornly consistent in the low 40s ever since. Let's therefore do another deep dive at this stage into Singapore. So what we can see here is that it tends to be older part-time workers most concerned that their jobs are less secure. A Forbes report recently demonstrated that older workers were demonstrably more susceptible to employment issues as a result of COVID-19 due to factors including less ability to adapt to new workplace procedures, like remote working and working from home, and indeed a higher reluctance to expose themselves to potential contagion. Of course, we might expect that our data is detecting the corresponding impact of this reduction in job security to our consumers' wallets and spending behaviour. For example, workers who are more concerned about their job security are now more actively being concerned about reducing their day-to-day expenses, such as 2/3 who are worried about paying their rents and their home loans. They're also cracking down on what they may see as non-essential expenditure, with almost half telling us in Singapore that they're spending less online on clothing purchases in the last few weeks. As we might expect, this can have a detrimental impact to consumer confidence and only mean that our economic recoveries might take longer than otherwise would do. Next slide, please. So what is the outcome on household and consumer confidence? Well, our data is still showing large reductions in confidence as many people across all of our countries report that as of early June, compared to 1 month ago, they feel their household financial situation has indeed worsened. This is particularly apparent in markets such as India and Thailand, where over half of households are feeling the ongoing pinch financially. And large numbers in both Indonesia and the UAE also feeling like the situation in their household has worsened over the past month. Comparatively small numbers are reporting an improved financial position, with 1 in 10 Australians feeling better off since last month, and around 15% of people in China, Indonesia, and Malaysia, respectively. Next slide, please. However, when we explore this data again, we can see signs to be positive about what looks like a decline in some of the negative outlook. So when we compare this data to 1 month ago, across the majority of markets, we see a slow but steady improvement, with less people telling us that their household financial position has worsened, and progressively more telling us that it's improved. So we see, for example, particularly notable falls in negative perception in both China and Thailand, which has seen a decline of 10 percentage points in negative outlook of their household situation in the past month. So what has been the wider economic and financial impact from COVID-19 on household financial behaviour? So our monitors can tell us some of that across the region by showing a strong and consistent trend whereby the majority of households in almost all markets are cutting down on actively reducing what they see as non-essential expenses. And we saw one example of this earlier in the deep dive to Singapore data that I just showed you. There are a lot of data points on this slide because we're tracking so many markets, but you'll see a clear trend in all markets where people report reducing their non-essential expenditure, especially in Indonesia, where almost 7 in 10 households tell us that they're doing this by reducing spending on non-essential purchases. Between a quarter and up to 40% of households across the region are drawing more from their savings to see them through this time, and that's especially apparent in Singapore and Malaysia. Perhaps, fortunately, households are reporting not too high an increase in the level of debt they're taking out to cover their expenses, such as Hong Kong and China, where fewer than 1 in 10 people in households say that they're taking out additional debt to help them pay for their day-to-day expenses. However, in Thailand, we see that over a quarter of households are telling us that they are taking more debt throughout this crisis. So savings may feel like an odd behavior right now, but in fact, we know from numerous studies that when people go through a bad economic situation, they tend to feel they need to be save more in order to have a financial safety net for the future. So sometimes this can obviously contribute to the problem as well, because households tend to save rather than spend, which can indeed worsen an economic recovery. So among our region, we see that Thais and Malaysians are amongst the biggest savers, with almost 40% of households saying they're putting more money away than usual. So on the same topic, we also asked people what one thing they would do if they received an unexpected windfall or large amount of cash. And we stated that this would be the equivalent of about 1 month of their income. And again, we see a drive towards saving for a rainy day, predominant across Asia Pacific, with Singaporeans, people in Hong Kong, and indeed Malaysians saying they'll put the money away for another time. Many are saying that they would use this money to pay off debts that they may have accumulated over the recent history. And as previously discussed, it makes sense, therefore, that Thais, who were among the most likely to have taken on debt in our previous slide, thank you, sorry, in our previous, thanks, Will, yeah, that slide there, thank you, sorry about that. It makes more sense then that Thais who took on the most debt in our previous slides are saying that they'd use this money, if they received it, to pay off some of that debt, with a third saying they would do this. So only very few say they'd actually spend the money if they receive this, so about 1 in 10 in most markets. People in China were most willing to spend it at 18%, and people in Hong Kong and Singapore were most likely to say that they would actually invest the money. So in summary, on a whole, countries where people currently have higher worries about the state of the economy and their job security, we see they tend to be more likely to look to save this money rather than spend it. The last few slides now. So approaching the end, we're going to turn to people's expectations and concerns for the future, as well as touching on some of their behavioural changes that we may expect to see moving forward as our countries come out of COVID-19 pandemic and the lockdowns. So asking our respondents some of their concerns moving forward, we can see the topics here, and we might divide them between what we may see as external factors and concerns, such as a global recession and local businesses not being able to recover, and then more internal factors, such as being unable to pay their bills, their rents and their mortgages. We see clearly that the most common concern across the whole region is a global recession, which might make sense given some of the other data that we've explored today. We might group together the internal and external factors for a moment and see that in some countries, such as Australia and Singapore, people are notably more concerned about the external factors, such as that global recession and indeed their local businesses not recovering, than the ones impacting them directly. And this is a trend less apparent in the likes of China, Malaysia, and the UAE, for example. Focusing just now on Australia, where this distinction between external and internal factors is most apparent, the fear that local businesses won't recover matches the overriding fear that there will be a global recession, confirming that the deep pain Australians felt during the lockdown of not being able to visit their local shops for a prolonged period. The last slide we're going to look at is a look at more behavioural metrics as we adapt into the future. And corresponding with the last thought around global recessions and local businesses not recovering, we asked people what they may be doing in future as a result of the change in their behaviour as a result of the pandemic. And it's not surprising, therefore, that the vast majority of Australians, around 3/4, said that they will proactively go and support their local businesses more moving forward, as we move further out of lockdown, and you know, they have memories of the closed shops and cafes still fresh in their minds. It's probably not surprising. Australians are also renowned for loving to travel, and in the past it's tended to be mostly international travel. With the ban on international travel still being apparent, maybe it's not surprising, therefore, that they want to continue that trend of supporting local, with 6 in 10 Australians saying that they want to take more local domestic holidays moving forward. But still, 43% are telling us they can't wait to go on a holiday overseas again as well. And to finish this up, in other interesting stats, the idea of using cash, we know, took a massive hit early on in the pandemic because many saw it as a means to transmit the disease. And many businesses turned to preferring card payments only. So the impact of this, for example, the Reserve Bank in Australia demonstrated that ATM withdrawals of cash actually fell by 30% in March this year. And it's therefore not surprising that many Australians are saying they'll probably want to use less cash in future. I think with that, and with the time we have left, I'm going to push back to Will, and we can be happy to take any questions people have.
Fantastic. Ben, thank you very much indeed. Really, really interesting stuff there. Okay, so over the next last remaining 6 or 7 minutes, what we're going to do is answer your questions, both looking at the ones that have been submitted as we've been talking, and the ones that were submitted ahead of today. So just a reminder, there is a chat function. Please do write your questions in the chat function. While I give you a minute to do that, what I am going to talk just very, very briefly about is where we're going next with our data. So as the nature of the pandemic evolves, so must our data to best fit with the questions that businesses have, that governments have, and the public health organizations have. And what we've been doing is running each block of surveys in blocks of 8 weeks. So we are coming to the end of block 2. Block 3, which is our chance to evolve, that starts in the first week in July. So what we are looking for at this moment in time is any feedback from existing clients and people who might be interested in our data to put forward suggestions as to what changes or what questions they would like to see covered. If you do have anything, please do forward those suggestions, either in the first instance to your local account manager or directly to our global inbox at info@yougov.com. Right. Enough about that. Let's go. I think there was more of a couple of technical questions, Irvin, early on about brand index and the metrics. Do you want to answer that one, please?
Sure. The question was, how is brand index buzz score derived? So in brand index for buzz, we ask 2 questions. Which of the following brands have you heard something positive? Which of the following brands have you heard something negative? Positive minus negative gives you the net buzz score. And what that means is that there are more people hearing something positive, your buzz score will be high. If your net, or if more people heard something negative, then your net score will be low or even become negative. Yeah. There is a second question. So one of the charts which I showed that people who are afraid of COVID-19 have not traveled in the last 12 months. Does it mean that people which are afraid of COVID-19 have not traveled in the last 12 months? Does it mean that people which are not afraid of COVID-19 have? Based on the data, which I've just opened and looked at, that is true. However, it is not significantly different. And what that means is that there are also people which are afraid of COVID-19, which have traveled in the last 12 months, vis-a-vis those which are not afraid. Yeah.
Fantastic. Thank you, Irvin. Okay, I'm going to come to one that was submitted. I'm going to come to 2 actually that was submitted beforehand. The first one is really interesting. It touches on mental health. I'm going to point you in the direction in this instance because we didn't cover it in our presentation here, but we do track it in our behavioral data. So we ask, and we have data from many markets around the world about the state of people's mental health, about the state of consumers' mental health, and what that means as a result. If you do go to our behavioral data, either on COVID Data Hub or on GitHub, you will be able to find that data. But that does look at the PHQ-4 scale, so people displaying severe or moderate signs of anxiety. So something that is actually quite pertinent and very relevant at this time. There was another question submitted beforehand about what can we learn from brands that have performed well over the COVID period and what type of communication they're using. What I think we saw very early on is that some brands did particularly well when they got out there very, very early with "we're all in this together, it's unprecedented times." But those messages are now overused and tired and are not cutting through. And I think especially what Irvin picked out, not only looking at the brands that performed well, but also the brands that have not performed so well, is action or lack of it, in many words. So that if you look at the insurance companies that paid back premiums, if you look at the actions that supermarkets in Singapore about supporting employees, if you look about Adidas in Germany not wanting to pay rent as a tenant in many of its retail stores, what you can see is it's action, not necessarily words, that are driving brand performance. Right, Ben, looks like you've picked something out, one of those questions. Over to you.
Thanks, Will. I know we're almost out of time. We just saw a question on the chat just now regarding travel behaviours and expectations for when populations might want to begin travelling again. Just in the last few seconds that we have, clearly, obviously, travel across the region has been heavily restricted, both internationally and indeed, in many cases, domestically as well. This is as a result of the lockdowns governments have imposed, but as more and more countries begin to ease their lockdowns, what we will expect to see is many people wanting to return to travel behaviours, but only corresponding with the impact on the health situation as well. And by that I mean governments will only be happy to allow travel, but either domestically or internationally, when they think the health situation allows for it, which might be slightly differently to the other economic measures that we've been exploring today. In some markets, we are looking at this specifically, for example, Australia, but indeed, we do have some questions on travel in the general monitor as well. So if you have any questions on this in particular, we're more than happy to take them offline as well and just get in touch and we can talk you through some of that data.
Fantastic, Ben. Thank you very much indeed. We are over time, but thank you very much for your questions. What we will do is we will come back to you and answer them via email. First of all, thank you very much to Ben. Thank you very much to Irvin. But most importantly, thank you very much to you, our audience, for participating and for engaging with us today. Copy of these slides and the recording will be circulated afterwards.